Let's also go across to ET Now and ET Now Swadesh's Head of Research Abhishek Gaushande, who is now joining us to highlight if there are any red flags which investors should be aware of when it comes to this IPO. Abhishek, over to you.
See, broadly, if we see that the primary red flag in this company is that just before the launch of this IPO, we have seen that it turns out to be profitable after reporting a loss for 3 consecutive years. Second thing is that even though it is claiming that it is tech-enabled company, but prima facie the nature of the business is a trading business. So you know that there is a cap. Naturally, there is a cap of margin expansion in the trading business, because ultimately you have to pass on the whatever be the value-added benefits you are drawing to your customers. Third is that ultimately it is a working capital management kind of a business where you can easily see that the working capital pressure has been eating away the kind of eating away the benefits you are drawing at the operating profit level. Even if you see the numbers in 9-month FY25, your operating margin has been improved, but despite that your operating cash flow was negative. And considering that, and this is the most important thing, is that at the end of the day it has to manage this working capital and raise the fund from multiple resources. In light of that, out of this 500 crore rupees that it has been raising through this IPO, almost 45% of the fund will be utilized just for the working capital management. So you can say that it is a misallocation of the resources. You are generating funds from the long-term sources, but utilizing it for the short-term funding. So considering that, it is quite difficult to build up investment case for this kind of business model. So we have assigned almost 2-star kind of a rating out of 5 to this IPO.
Okay, so several red flags in this particular IPO, as Abhishek was just mentioning. But to discuss this in greater detail, we now have Deven Choksi, Managing Director at DR Choksi FinServe, now joining us. Mr. Choksi, thank you so much for taking your time out. Abhishek was just highlighting a whole host of red flags. It just turned profitable. At the operating level, cash flow continues to remain negative. What is your take on this particular IPO?
Avoid.
Okay, and if you can highlight some red flags the way Abhishek was mentioning for us?
I think he covered it up all. Frankly, I think our research note also we put across, I think in which we have highlighted those points. Largely, we don't see the scalability part getting covered into this particular business model unless you continuously infuse capital in working capital requirement of the business. And amount of money that you would save in form of working capital related requirements that you have would be the kind of profit margin that you would be earning. That is what is coming out very clearly from the financial numbers. So given the situation, tomorrow suppose if this company has to scale up, then possibly they will require more amount of equity capital to prevent, I think, any kind of debt related cost into the books. And equity, when you start comparing equity with the return on equity, I think that probably would be a big kind of a question that where exactly I think one is going to earn out of it. Another point in this IPO, what we are not liking is that given the nature of the business, a B2B business, wherein I think you have limited pricing power in the business, you are actually, I think, charging a premium of almost, I think, 48 times to the EBITDA. And I guess, I think that's where probably one is not fully comfortable about paying that kind of a premium. I do agree that I think with the premium, number of equity shares go up less and the reserve will get more. But at the same time, this is not one time. This is next time also, I think there will be similar kind of...
Understood.